Vietnam has been growing very strongly over the last 3, 4 years. We've been growing about 6.5 to 7%. Clearly, with the coronavirus, we're reducing GDP growth to about 3.5 to 4%, according to Fitch and Standard Chartered. But what's going on here is we still have a very young population of almost 100 million people, and they're about 35 years of age and less, 60% or more, 35 years old and less, and they're going to spend, they're going to consume, and there's a lot of opportunities in Vietnam to allow for companies to take advantage of the domestic consumptions that's going to happen in the next 2 or 3 years. And markets have come down quite significantly. We've seen it come down to about 10 to 11 times earnings at the moment, which is about 20 to 30%, like you said earlier, from its high. So we see a lot of opportunities now to pick up stocks that are what we call very liquid and have a history of foreign participations.
Okay, so those would be smart plays if you're looking at the longer time horizon, 2 or 3 years, as you point out. But what about in the here and now? Because even though Vietnam hasn't seen as many cases of the coronavirus as some of its neighbors, clearly not immune from the global economic downturn and really how things have changed over the last few months. We were talking so much about Vietnam as being a beneficiary of a change in supply chains due to the U.S. China trade war. But now you have fears of perhaps more protectionism, people bringing production more locally because of this virus. And then on top of that, I'm sure for the exporters, demand is expected just to drop to the U.S. and Europe and other places. So what does that mean to you as an investor?
Yeah, that's a good point. We have been asked by some of our investors what's going to happen to the export industry for Vietnam in the coming years. What we're seeing is a combination of 2 opportunities for Vietnam. Obviously, the U.S. China trade war has forced a lot of multinationals to diversify away from China and into Vietnam. But we're also seeing that the supply chain disruption that we saw at the beginning of the year is also forcing multinationals to diversify their supply chain out of China. We're seeing supply chain movement into Vietnam, particularly in the electronic space. For example, most of the AirPods that Apple produces are now produced in Vietnam. So we're seeing a combination of the U.S. China trade war and COVID-19's disruption on supply chain, encouraging a lot of multinationals to diversify their manufacturing into places like Vietnam. So we do see that as a very positive sign. And further to that, if you look at what Vietnam exports, it's more on the low side of the value chain. It's sort of the barbell effect, our chief economists would say. On the one end, we export a lot of low value added goods. On the other end, we export electronics like Samsung smartphones and et cetera. But on the low end, what you're seeing is places like Walmart. The people are consuming products from Walmart at a significant pace, especially as we go into a recession. And that's going to benefit Vietnam's export industry dramatically.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to the channel for more. Thanks for watching.